Welcome to Tools, Talents, and Techniques. I'm your host, Dustin Sutton, and today I have the pleasure of being joined by Sonya Rocvil. She's the principal of Bedrock Real Estate Investors. She's an entrepreneur. She specializes in the acquisition and management of multifamily apartment buildings in strategic U.S. markets. She brings a wealth of experience to the table as an accounting and financial services professional, and she has a proven track record of designing and implementing very detailed financial models. So one of the main reasons that I think this is going to be so impactful of a conversation is that she's gone from being an accounting analyst to working as a director of strategy for a major corporation, to being an entrepreneur and having her own investment shop. So really excited about this conversation. So I hope you enjoy it. So I'm happy to welcome Sonya to the show. So Sonya, welcome.
Thank you, Dustin. Thank you for having me on. This is great.
So I just alluded to your experience with American Express, or when you're starting out your career. Could you tell our listeners a little bit about the beginning of your journey?
Sure. Yes. Well, and thanks for reading my bio and talking about that. Commercial real estate is a second career for me. So I started out in accounting, and I went to become an auditor. And after getting my CPA license, I realized I didn't want to be a partner at an audit firm. So that's when I left, and I went to American Express, which was really a great company. I spent the majority of my career there as a professional there. A fantastic ride. I met a lot of people and learned so much. But after a while, through the promotions and the different groups that I've worked in, I started thinking about where I saw myself, going in the company after a period of time. And it was getting harder after each role to think about where was I going to go next. And not because there weren't roles. I just wasn't sure if that was the right role for me or the right path. And so what I started doing, I live in New York. I started reading books about real estate, because like real estate is everywhere. I always say it's like everything is real estate, because it's where you live, it's where you work, it's where you go to the library, it's everything. So I started reading Rich Dad Poor Dad, like probably a lot of other people. And I was just really inspired by the thought of commercial real estate. And I started taking, classes just to learn more about like buying properties, because it wasn't something that I had really thought about doing, or I even knew how I would fit that in with my career. But I was just fascinated by it. And I joined my local real estate investment group, RIA, also to just surround myself with people who were doing real estate and talking about real estate. And then as it would happen, there were changes at the company, and my entire group, including myself, we were all laid off. And it gave me pause, because on one hand, I was like, wow, I've spent my career here. I do like the company, but at the same time, I'd been thinking about what was I going to do next. And it was just really sort of like the right time to take a step back. And at that point, it was making a decision of thinking, okay, I could try to go to another division and, try to figure something out, or go to a competitor. But then, because I had been thinking about real estate and just reading about it and trying to immerse myself, it seemed like that was the perfect time to try something else. And I was so fortunate. One of my coworkers, I had told him I was interested in real estate, and he told me about Project REAP. And Project REAP is a program that focuses on diversity in commercial real estate. It was, he was literally like, I think the applications are going to close soon. You really need to apply. I did. It was such a blessing. I got in, and 2 weeks after my last day at the company, I started Project REAP, and that was like setting me on a journey. at that point, because it wasn't just real estate, it was commercial real estate.
Was there anybody in your life that was already in the real estate industry, residential or commercial, that gave you some kind of inkling of what's behind the curtain?
Yeah, so my uncle has a brokerage, a residential real estate brokerage, and so I decided to also get my license too at the same time, but not knowing exactly how I would use it, or how I wanted to utilize it. But I thought, I'll get my real estate license, so I have that too here in New York. But when I was when I was taking the REAP classes, and then ultimately I joined a multifamily investing group, those were the things that really helped me like kind of focus on commercial residential real estate. And it really inspired me to really look at multifamily.
When you were looking at and you got interested in real estate and you're reading books, did you find that your experience in finance and being an analyst and a manager in finance, that it was a little easier for you to comprehend some of? Do you think your background helped out?
I really do, Dustin. I think it did help out because I think one of the things when people start out looking at commercial real estate, or even the thought of multiple units, because a lot of times people start out with like a single family or a duplex or something. And when they start thinking about, 20 units or 50 units, 100 units, it seems daunting because it's these big numbers. And in a way, yes, there's caution there because they're big numbers. But at the same time, because I was coming from an organization where there's billions of dollars changing, like, seeing big numbers didn't scare me. That wasn't the part that made me intimidated. It was just that I didn't know about the industry or how things worked, and I didn't know how to underwrite, but I understood how to use the models, and like what are some of the just how a model is supposed to work, and what am I supposed to get from it, and where to question if things didn't make sense to me. So I was comfortable with some of those tools, but not at first with the process of underwriting itself.
So you join Project REAP, you get accepted into the program. Was there anything that once you got involved in the program that you were thinking, oh, this is way different than what I originally imagined? Were there any challenges or anything
Yeah.
that you didn't realize?
One of the things about Project REAP is it in the past, it brought in people from different parts of the commercial real estate industry. So people who did property management, asset management, like brokerage, a whole different variety of people. But one of the people that came in, she was talking about private equity. And that was a new concept to me. And she was talking about the fact that, they work with people, they buy properties and they invest in them. And then she came in with some case scenarios of different types of deals that they would look at. And, it was just high level. It wasn't a whole lot of detail, and we weren't doing any analysis per se, other than the information that was given. But, immediately I was looking at the different types of deals. I love the multifamily deal. I love the potential projected returns, and just the thought of that, also, growing up in an apartment building, I just know what apartment buildings are like. And it just made sense to me, and people need a place to live. So when she asked, who would invest in in the apartment buildings, I was definitely one of those people. But that was one of the things I was like, this is really exciting that you can make these investments in these deals. And, why not own real estate if you can?
So I think the fact that you got to see with with Project REAP and being able to see the different avenues, I think that's something that's really important for people that are trying to find their way and try to figure out what vertical is best for them. And there's so many opportunities in real estate, and even specifically commercial real estate, that until you are exposed to it, you don't even know what you don't know. So that's something that I think is so fantastic what Project Reap is doing. And so, yeah, thank you for sharing that as being a seminal moment for you.
Yeah, absolutely. Because honestly, a lot of times when people think about real estate, their anchor is, the person that sells the house next door, and that's not wrong because that is real estate. But like you said, there are many different avenues.
I was speaking with a friend of mine one day and trying to explain what I do or what commercial real estate truly is. And we were at a retail center and we're sitting there having lunch and we're talking. And I started to point out all the different vendors and parties that make an office building or a retail center go around. Then I point out the signage, the fire sprinklers, the fire safety, the day porter, the roofs, the HVAC, like everything. And I'm like, there are so many opportunities that just there that you can see that make it that make the property operate efficiently. But then also, I'm like, think somebody had to sell this, right? There's people that lease these spaces and put people in there. There are people that handle the tax, the insurance, and there's just so much. And then on top of that, in each one of those verticals, there are people that do the HR in those companies, that do the accounts payables, accounts receivable for all those individual trades. So there's so much opportunity in this. And I'd be remiss if we didn't talk about it right now because there's a lot of challenges in the marketplace and commercial real estate specifically. There are opportunities for people to make an impact and things are going to have to change. Things are changing every day and there's a real opportunity for people to make an impact.
Absolutely. Absolutely. Yeah, I totally agree.
So one of the things that we spoke about before about the importance of asset management in the current climate, is there something you want to share there from your perspective?
Yes, yeah. So there, there are different phases of like when you purchase a multifamily apartment building, and a lot of people, you spend a lot of time thinking about acquiring it, right? Because it does take a lot of time looking at deals, underwriting them or analyzing them once you have your market and everything like that. But one of the important pieces is also the asset management, and that's the part where you're partnering with your property manager, the group that's going to be managing the day-to-day function of your property, and you're working with them to help with executing the strategy of your apartment unit complex. And one of the things that I think about, because when I'm analyzing or underwriting a deal, I'm thinking about it from the standpoint of being an operator, the asset manager, the person that's going to be looking at the financials as I get them, as the property is performing. And so one of the things I would say is when you are looking and analyzing at deals, to wear that hat as an operator, because that's going to help you realize whether you are going to be able to achieve the numbers that you have put in your plan. And you know with that, you need to layer in some conservatism and being realistic of how things will actually play out, because nothing ever goes exactly the way you think it's going to go. There's going to be a hurdle, or there's going to be a time when you're not going to be able to implement this, or you may have to change strategy, which we've had to do before on other properties. And so if you do that, making sure you have some reserves, you have the flexibility, and you've thought about, or you worked with people who can help you think about how this will play out, in real life, not just in the model. Um, that's really important when you're looking at deals now.
And how do you factor, without giving away the secret sauce, how do you factor that type of risk in? Like what could go wrong? Because somebody might think of like, oh, there's a percentage here, a percentage there, but there's something that you look at as an operator holistically that you have a specific approach?
Yeah, so I would say, I'm looking at the two sections of your P&L. You're looking at, your revenue, and you're looking at your expenses. And so the revenue, just understanding your rent roll, who's there, how are people paying, what's happening in the area, with collections. I think that's really important because that's going to help you understand like what's really going to happen in terms of your revenue playing out. And then also your operating expenses, making sure that you have like realistic numbers, that you're taking into consideration what's happening in the macro markets right now, what's how expenses are going up significantly, and is your underwriting capturing that? Those are the questions that I would say. And then I would say the third piece of that is your capital expenditure budget for the updates or improvements that you're trying to do. Do you have realistic numbers for that, and what's your plan and time frame for expending those funds?
When you're doing this underwriting, and I want to be certain, so you've had your own firm for over 10 years now,
Mm-hmm.
right? So, well, first of all, congratulations. That's fantastic.
Thank you.
And part of this show is about tools, talents, and techniques. Obviously went over your talents. Are there any tools that you use in your day-to-day when you're, even if it's software, any type of thing that you've done along the way that you found has made an impact on your business?
Yeah. So first of all, I would say, the tool that you use to do your underwriting, you find one that you like, that you're comfortable with, and that makes sense for the type of strategy that you're doing. I do right now, I'm doing syndications. So I have to have a tool that will factor that in, so I know what type of return I can project for my investors. If you're all, just doing something that's a joint venture, or you're using your own funds to do your investing, then you don't need something that's like that. But you just have to find the one that works for you. And so I think that's really important, that you're comfortable with it.
And that's, yeah. So I know Argus is very popular. Is there anything specifically along the way that you found more helpful than others?
Yeah. So one of the tools that I use is, it's an Excel. It's called, it's a syndicator tool. It's called Synthesis.
Okay.
I like that Excel model. Again, there are different ones out there. You just have to find the one that works for you. That's the one that I use. I'm also currently using Red IQ, because I really like how it's able to pull in information quickly to me. So I have it like integrated in the way I need it to, for the model that I use. So that's a good tool for me as well.
So is there anything else that you see as an overlap between your personal life and your professional life, like things that you're saying, oh, this has helped me develop as a person as well as professional? Because I think that's at the heart of a lot of these things. Like people that I in my experience, this is more than just work, right? Like this, to your point, when you start talking about where people live, where people spend their time, where you're building communities, is there any overlap that you see in your personal and professional life?
Yeah, well, like I was mentioning, I grew up in an apartment building, and I was happy there with my parents and my family. I had other family members that also lived in the building too. So I know that the place where you live can also be a community. And so I think it's important to think about that, to think about your residents. There was someone who said, apartments don't pay rent, people do, right? So in any aspect of this is a people business. And I think it's important to think about the people who are living in your property, when we're making decisions on updates, upgrades, or just things to try to bring a community together. If you can do that with the size property that you have.
Yeah,
And
I love that. That's fantastic.
I think that's important. I think that's really important. yeah, and that's just my personal take on it.
Well, in your experience, do you is there anybody, or have you seen anybody do that exceptionally well? Like somebody who really makes their investments like a true community and gets feedback. And I guess further from that, how did they do that? How do you get the feedback? How do they take all that into consideration?
Yeah, I think some of the, the larger groups, it's hard to kind of name by name, but like some of the larger groups that I've seen or heard of, you know, a lot of what they do is take into consideration how like the resident experience. So sometimes they will use tools like Who's Your Landlord? I think that's a tool that is used to help gauge interest and also just promote, not only promote, but also get information from residents. I think that's important to do. I also think that I've also heard and seen people do surveys, and, among their residents, people that are coming in, people that are leaving. And I think overall, I mean, you just ask why, oh, thank you for telling us that you're leaving. Why? Just tell us what your thoughts or feedback. Oh, we're buying a house. That's great. That's a great reason for somebody to move out of your apartment complex. And so then, hopefully you'll be able to bring in somebody else who will be able to, have a stable lifestyle so that they also can move out and buy a home if that's what they want to do. So, I think it's a matter of, thinking about the like I said, the residents in your communities and how can you best serve them, because it helps everybody. It helps them, and it helps your management team, and then it also helps your investors as well.
One of the things that I heard from that is having an open line of communication.
Yeah.
And if you have that, you can ask, what's going on, why, all those things, and in a way that's you truly authentically, that you care because you want to make sure that they're in a place. I think that's hitting the nail on the head. And again, there's tools. Who's Your Landlord is a great one. And I think there are like survey tools to find out. And this goes beyond even real estate. This goes into any type of community or organization, and having that open line of communication and actually being able to digest that information and take tangible steps to actually make an impact with that data, with that information.
Absolutely, Dustin, and even in the circumstances where it's not comfortable, we have a great property manager who's really great at talking to residents, and when people are behind in rent, just understanding what their situation is. Sometimes it turns out that the person lost their job, but they're working to pay it off, and then you can come up with a plan to help them. And so then, and you're not going down another path that you didn't need to. It's just understanding that particular situation. Sometimes you have to go down the other path, but other times, having that conversation and just seeing where that person's coming from, you may not have to.
And having people in the role that can have those open line is crucial. And I refer back to there was a time when I cut my teeth in management, on the management side of things, and one of my favorite experiences was just being a part of one of the communities that I manage, and this was commercial, it was an industrial park, and it was just so. The conversations that I had with the tenants were mostly about their favorite sports team, the weather, their favorite yoga studio, like those type of conversations. But what that allowed for was that open line of communication, that when something was happening, they could talk to me in a normal manner. Like they're calling their landlord, but it's like, hey, this guy's parked in my parking spot. It wasn't, it softened the blow of anything, whether it's coming from them or coming from me, because we were looking at each other as humans.
Yeah.
That just wanted to have a human experience and have a safe, comfortable place to do our respective businesses.
Dustin, I love that, bringing humanity into the fold of your business. I mean, that's what it is, because that's who you're serving, other people.
One of the things that I've realized also in, all the tools that we have in technology and the internet and being able to share all this information. It's funny, I say internet like it just came out, but there's so many things that are available that we're able to connect and share. But there's also things that are so divisive, and I'm always looking for new tools and new ways to connect with people, because again, most of the progress that I've seen in real estate and even in the tech side of things, it's connection. It's all about giving people an opportunity to connect and further their goals.
Yeah, absolutely.
And in this climate, and this is a segue into my next question, is that these are challenging times, and has been for a while. It feels like the musical chairs has stopped, but there's still people humming and pretending like that the song's not over. But people are trying to figure out what's the best way to handle things and to do things. What's your take on the current climate? And I know you alluded to it a little bit before about proactive asset management,
Yeah.
but I wanted to hear your take on how people should look at this.
Yeah. So, I think, it is important to think about especially when you're thinking about like purchasing a property, from the upfront, thinking about it as from the operator hat. But then when you also are operating your property, you do need to keep looking at your original assumptions. What's changed? Has anything in the environment changed in your where your property is located? What's happening overall in the city, in the state, etc. And how does that have an impact on your own property? How can you use that information to think about how do you best serve the people in your community? And then also, again, as you're looking at deals, continue to just when you underwrite, or when you look at, the more deals that you look at, the more you'll get to see like what's happening in the marketplace as well. If you're, again, just starting or starting to look through ways to acquire properties, seeing what's actually happening, what's transacting, having that relationship with the brokers and property managers in your area, that gives you input also as to what is actually happening on the ground and what are people working on the ground. So I don't do the actual property management, because I don't live in the same state where our properties are, but it's important for me to stay connected to the property management team to understand what's actually happening on the ground, so that if we have to make any shifts or change something, we can do it in an informed way, and we can react as quickly as possible to what's happening.
And how do you do that? What's that communication cycle look like with the boots on the ground, if you will?
So it's usually multiple touch points a week. But we have at least like 2 meetings every week, I would say, to go over, usually it's like a focus on financials, and then like a focus on, also on operations, and trying to pull those two together. But it usually ends up being more than 1 meeting a week. And so it is a lot of dialogue, and it's not a hands-off business. It's very active, that, to be involved, to be engaged, and to work with people who also want to do the best that they can also for the communities. So that's important too, finding people that you want to work with that have similar values to you, so that because there's already things are going to happen. It's going to be, there's always challenges, but it's always good when you can align back to that North Star. That's, this is our underlying principle of what we're trying to do. And that's a guiding light to how to make decisions.
Do you feel like when you're communicating with the people in those markets that are on your team, do you feel that those values are also shared with the vendors that you bring on in those markets?
I do. And, because we usually go through a series of questions with them, just because, especially if you're talking about, like, let's say a larger CapEx project. So we want to make sure that, our community is safe, especially if it's an exterior project, like, roof repair or something like that, that our community knows when this is going to happen, because it's going to be disruptive. It's going to be loud, and there's going to be a lot of workers on the ground. So making sure that people know in advance, communicating with the company so that we could put up signs, cones, or whatever. Depending on the project, ensuring that there's a good cleanup afterwards. And then also picking the materials. We know that we want something that's usually like low maintenance, high quality, so how do we get that too? So that's also living the values, because we want to have a product that we're spending money on that's going to look good and also serve a good function for our residents, and for ultimately the next owner.
Yeah, that's right. And making sure that you're investing in, there's value, and there's long-term value. And I think one of the things that can be challenging, I know, is, if you're not in that market and you are bringing on a vendor to, let's use the roof, and you never heard of this roofing company before, but they said they worked with them before, so they have all their insurance and their licensing, and you're like, okay, but yeah, you sure about that? And so sometimes there's the national. I've worked with some national vendors that were absolutely fantastic, and they had their own oversight for the subcontractors that they used. So there is that balance, that of like how much trust your team on the ground and say, okay, if you're going to use this vendor, let's make sure that they're all qualified and they fit all the parameters. But that's great that you have that relationship with those people on the ground.
Yeah, absolutely.
So I want to be mindful of your time, and I want to make sure that there's one thing that I really would like to hear, because in your journey, you had one career, and then you kind of started, I won't say started over, but you started a new career. If you were to talk to your younger self, when you were starting, is there any other, like, tips or advice that you would give yourself?
Yes, I there were a couple of things. I think I would say, a lot of people talk about, like being an entrepreneur, and it's great, like being and it is great being an entrepreneur. But usually when you start out, you have a W-2. What I would say, make your W-2 work for you too. So like you're working in your company, thinking about, in addition to, I know a lot of times people are like, okay, I kind of want to get out of here, or maybe I want to do something else. Find ways to leverage that W-2 that you have to get the most out of it while you're there. So if it's like buying a home, because it's easier to do that when you have a W-2 versus if you have your own business as an entrepreneur, do it. If it's putting that extra money aside so that you'll be able to invest it, so that you can, buy those multiple homes. Or if, that's also a good time if you want to buy anything under four units and below. Having a W-2 is also helpful for that too. So if you want to, leverage that to do that strategy at that point, it's also a good time. It's also a good thing to do that. And then, if I actually had to time the scene, I would say anything in 2015, buy it.
Yeah. Yeah, that's a good one. That's a good one. Well, listen, Sonya, thank you so much for your time. Congratulations on all of your success. We've spoken before, and I'm always impressed with not only what you do, but how you carry yourself. And you are truly a leader and a trailblazer, and that's why I'm so thankful to have you on the show and help amplify your presence.
Oh, Dustin, thank you so much. And thank you for creating this platform. This is fantastic that you're doing this, and kudos to you also for arranging this for everyone to come on. So thank you.
Yeah. All right. Well, listen, thank you very much. And thank you for joining us. I'll talk to you soon.
Thanks.
Thank you for tuning in to this episode of the Tools, Talents, and Techniques podcast. We hope you found the conversation insightful and engaging. And if you enjoyed this episode, we invite you to like, subscribe, and share the podcast with your network. By subscribing, you'll never miss an episode as we continue to bring you inspiring discussions with industry leaders and pioneers. Stay connected to the latest insights, trends, and strategies across various fields, from business and entrepreneurship to technology and innovation. Your support is vital in helping us reach more listeners and expand our community. So don't forget to leave a review and share your feedback. We appreciate your input and are committed to delivering valuable content that empowers and inspires. To stay updated on future episodes, be sure to follow us on either LinkedIn or our website, suttonrea.com. You can also find us on most podcast platforms like Apple, Spotify, Google, and Amazon. Thank you for being part of the Tools, Talents, and Techniques community. We look forward to bringing you more engaging conversations and valuable insights in the future. Until then, keep exploring, learning, and applying these tools, talents, and techniques to achieve your own success.